Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. China goes big. Stocks rise after the PBOC unleashes unprecedented support for the economy, including a rate cut and measures to prop up the housing market. Now it's political. Italian and German leaders square off in the struggle for Commerzbank after UniCredit becomes the German bank's largest shareholder. And a major escalation between Israel and Hezbollah. Israeli airstrikes kill nearly 500 people across southern Lebanon in one of the deadliest days of fighting in 20 years. Let's check in on the markets then on a day when China is either smacking of desperation in terms of these policy moves or trying to get onto the front foot and pry and finally put a floor under the pressure, of course, that's rippled across the equity markets of China and hammered the consumer and sentiment in that nation. But that is the market story of the moment as we continue to keep an eye, of course, on the geopolitics and the focus on the Middle East. European stocks looking to gains of 0.5%. The FTSE 100 here in the UK looking to add, 23 points. Look at the commodity sector. Look at basic resources. Copper up, iron ore up as well. That will tie in to the UK session, of course. When it comes to S&P futures, currently flat after eking out gains of 0.3% yesterday, getting back close to those record levels of last week. Nasdaq 100 futures currently looking to add just 2 points. Let's flip the board and look cross-asset. The focus, of course, on the front end when it comes to the Treasury yields, given the commentary we've heard now from a number of Fed officials, Alan Goolsbee suggesting that a number of additional cuts could be coming through for that economy. We also got a business sentiment index coming through from the US suggesting that strength is still there. Yes, it cooled, but input prices rose to the highest levels in around 6 months. Again, markets passing the commentary from various different FOMC officials, and we will be getting more through this week. The 2-year currently at 358, euro dollar at 111. Don't forget the soft data that we got out of the Eurozone yesterday. Brent at 74.64. Think about the demand impulse from China, but also that escalation in the conflict between Israel and Hezbollah. Iron ore, $93 a ton, getting a big lift today, up 4% on the back of the stimulus measures out of China. For more in terms of the market reaction to the policy response from Beijing, let's go to Tanya Chen, standing by in Hong Kong. Tanya.
Hey, good morning, Tom. Yes, that stimulus blitz is finally here, long awaited by the investors here in Asia. So let me just take you quickly into the stock market action first. We've just come off a lunch break here. You're seeing CSI 300. It was one of the worst beaten down markets this year. It looks like it's a very welcome change. On the H shares here, at one point it was up as much as 4%. Over 200 of the companies on the CSI gauge right now, all rallying. If you look over to the yuan and the FX rates and the board there, on the yuan, we're heading towards the 7 key psychological level here. It looks like the sentiment really is helping to boost the currency. We know that the 7 psychological level is one that is very keenly watched by exporters right now. We're looking for repatriation flows to really juice the currency. On the rate side, on China bond yields, if you look at the 10-year earlier in the session, we've seen the yields actually drive lower towards a 2%. That's a historic low, lowest since we've seen and since we've been tracking that data since 2002. But actually, given the risk appetite, the risk on sentiment, animal spirits getting relifted by this stimulus cocktail, we saw that move really pair. You can see the move most in the 30-year. It actually rose at one point by 4 basis points, and that's the most that we've seen in 6 weeks. That's when the policymakers were first intervening into the rates market there, guiding state banks around selling certain securities. And I'm just going to quickly take you into the RBA in Australia there. It was, as expected, a hawkish hold. All economists had forecasted this, but you can see that the Aussie there is really still holding on to the gains, up almost 0.4%. Outlook is very unclear, slightly off from the other central banks that we've seen in the region. That's because inflation seems to be persistent for the policymakers.
OK, Tanya Chen in Hong Kong with a check on the markets, the reaction across the asset classes to this decision by the PBOC and ministers in Beijing to push through more support, and a check, of course, on the RBA holding rates there in Australia. Let's get more details then in terms of what's come through from Beijing. China's central bank unleashing a raft of policy support, as we've been saying, for that economy as the government makes the broadest effort yet to hit this year's growth target of about 5%.
We will cut required reserve ratio and policy rate and guide the market benchmark rate downward. Second, we will lower the mortgage rate for existing housing loans and unify the minimum down payment ratio. Third, we will establish new monetary policy tools to support the stability and development of the stock market.
OK, well, who better to give it perspective and analysis then than Bloomberg's chief North Asia correspondent, Stephen Engel, who, of course, has followed the Chinese economy and what has passed and transpired over a number of years. Stephen, frame this for us then in terms of the significance and the key policy measures that have been announced today.
It is significant. It was bigger than most people had expected. When we got that note yesterday that they were going to be meeting and giving some sort of press conference with Pan Gongsheng, the central bank governor, we knew it was likely going to be, obviously, monetary moves. We didn't realize it was going to be some monetary easing as far as the 7-day reverse repo, the second cut since July, also cutting further the reserve ratio requirements at banks, the amount of money that the banks have to hold off in reserves. This is only the second time they've done that. It was actually Pan Gongsheng who last had an emergency press conference in January earlier this year that they did that first triple R cut. But the moves went even further, as he just mentioned about the mortgage relief for existing homeowners, those rates being cut, as well as down payment requirements for new home purchases. Again, those that rescue package on the property sector that was revealed in May really petered out because it was a huge ask of state-owned enterprises and the provinces to kind of buy up unsold and unoccupied homes. This is more tangible. It's basically opening the taps of liquidity and reducing the burden of households who have lost combined $18 trillion in paper wealth of their household wealth. So it's a beginning to try and put a floor on the obvious property woes. But also, there was more that Pan Gongsheng and others, the CSRC head, the securities regulator, they're talking about the possibility of a stock stabilization fund. Since that property rescue package in May, Tom, stocks, the CSI 300 in China is down 13%. Stocks are rallying right now that they're going to unleash about $113 billion US dollars potentially for companies to tap funds available at the PBOC to buy stocks. Again, this is showing the urgency that the stock market is suffering, the property market is suffering. Deflation is persistent for nearly 2 years now, 23 consecutive months. They have problems, and they only have 2 months left of the year to hit that growth target of around 5% GDP growth.
Yeah, Stephen, look, as you say, the equity markets of China are responding aggressively. The CSI 300 up 3.6%. So you told us they over-delivered, Stephen. What has the reaction been then to analysts, from economists that we've been hearing from around the policy response, and whether they think the optimism we're seeing in the markets is going to trickle down to the real economy?
You know, that optimism, as I said, has petered out in the past because some of the policy moves that they've done have been piecemeal. It hasn't been the big bazooka, right? And it's fine to bring out a big bazooka or call this the big bazooka, but it doesn't matter how big the gun is, it has to hit the target, right? So that's what we're going to have to see is whether these moves are going to be on target. Most of the analysts we're talking to right now and economists are saying this is a great first weapon to roll out of the arsenal. Obviously, multiple pronged approach here, but without fiscal stimulus, it might be tough to be sustainable. Right now, they already have some long-term special bonds. The quotas are still available there. I think they're going to let those be served, and then perhaps we could get some more fiscal stimulus and help at the provincial level as well to have some very tangible spending going on and help with that deflationary environment and essentially the confidence level. This is a confidence boosting move by the PBOC as well as the CSRC.
Really helpful context. Bloomberg's Stephen Engel, thank you very much indeed. Bloomberg's chief North Asia correspondent on the details. The policy response from China then. Let's switch focus to a major corporate story continuing to, of course, ripple through Europe. Diplomatic relations between Italy and Germany have taken a turn for the worse after UniCredit moved to increase its stake in Commerzbank. The Italian lender said it had used derivatives to increase its ownership to 21%, making it the biggest shareholder. The German Chancellor says it's a hostile takeover, but that's been rejected by Italy. Bloomberg's Oliver Crook joins us now from Berlin, who's followed all the twists and turns of this fascinating banking story for us. Ollie, the speed then of Orcell's approach has been remarkable.
Tom, this has just been a spectacular story, and I really want to take you through the basically only 10 trading days that we've had where this approach from UniCredit to Commerzbank really began. And it began here just before all of this action became public, where we saw in the private market, we didn't know this at first, Orcell was in there buying shares in the public market of what was of Commerzbank. Then on the 10th, and this is important context, Tom, the CEO of Commerzbank saying that he's not going to renew his contract and he was going to depart. Then the next day it becomes public because Orcell and UniCredit knew that the German government was going to offload their 4.5% stake into the market. And guess what? They bought the full stake with a fill or kill order. And then it comes out that they suddenly own 9% of the bank. This caught the government off guard. This caught Commerzbank off guard. And this caught everybody in Germany sort of scrambling for what to do. You had Deutsche Bank coming in, deciding to say maybe, there are things that we can do to sort of impair them from going full into this company and taking it over. And then we spoke to Orcell himself, and amid all this swirl and confusion of what was going on here, and we asked Andre Orcell, what is your plan with Commerzbank? Have a listen.
We want the flexibility. Flexibility because as a private investor at the moment, we may go up, we may go down, and we may combine. All the options are on the table.
And then Commerzbank was preparing a defense. They hired Goldman Sachs then to advise into it. And then we heard from the German government over these last few days. Things got a little quiet. And then over here, going into the weekend, they said basically, we're not in favor of this happening. They were a little bit sort of diplomatic about saying it. So going into the weekend, you had this sort of phenomenon where we close here, and then we open on Monday, basically sounding like the deal is dead. It drops down, and then halfway through the day we hear actually Orcell has bought derivatives to own now 21% of Commerzbank. And we should say he doesn't own those out. These are rights that they can exercise to then come into that ownership, because currently they do not have the regulator approval to own more than 9.9% stake into it. But then that set the sort of political machine into a frenzy. We had Olaf Scholz, who was at the UNGA trying to deal with sort of global diplomatic relations, having to deal with this question of Commerzbank, saying that basically unfriendly attacks, hostile takeovers are not a good thing for banking. We do not consider this to be an appropriate course of action. The shares got halted yesterday because of the volatility, and then they came plummeting back down. But I suspect, Tom, we have not heard the last from Andre Orcell.
Well, indeed. So we listen in, of course, to what the CEO, the head of UniCredit, has to say about this. But the politics, you talked about the diplomacy, or maybe the lack of diplomacy now, because the gloves seem to be coming off right now from both sides, the Germans and the Italians.
Yeah, Tom, this is really interesting. So obviously this is a massive domestic story. And also someone we haven't heard a lot from, Tom, are the shareholders of Commerzbank. What do the shareholders want, right? So the Commerzbank saying that they're examining all of their options. We should say they're holding a 2-day meeting today and tomorrow outside of Frankfurt to try to propose what their plans are to the supervisory board. You've got to imagine that the only thing that there is to talk about is this approach by UniCredit. The unions, of course, are putting huge political pressure on here in Germany. We're astounded and angry by the approach. We're going to have a press conference from them at 1 o'clock later today. And of course, the German government, what happened here? They're probing their own sale of their stake in Commerzbank to UniCredit. And this is, of course, if you go into the German politics here domestically, is huge ammunition from the people that are sitting at the sidelines. If we could switch up the board, where you have on the one hand the AfD, who is a sort of very nationalist party, and these are the nationalist pressures that you have in Germany, basically, and they're going to say, we're going to want to defend our stakes in banks, presumably, but also the opposition, the CDU, Friedrich Merz, saying that this was a disaster for the sector and that basically the government had lost control of the full process, to say nothing, Tom, of now the geopolitical dimension, if we could switch up the board here, where you have Italy very sort of unhappy about the fact that when they say, you come into Italy to buy a company, it's no problem, but when, suddenly you go to Germany, it's no longer a free market, because of course, let's not forget the context here. You have Lufthansa that wants to buy ITA, which is formerly Alitalia, as part of the conversation. But Tom, why I think this is so critical is at a time when you have sort of great ambiguity about the future of Europe, you have Draghi and all of these other sort of politicians who are discussing ways to make Europe more competitive. Part of what they talk about is cross-border bank mergers. If the Germans come in with a heavy hand and say, no way, that has huge implications for Europe.
Yeah, look, the ripple effects of this potential takeover are significant, are they? A brilliant breakdown coming through from Oliver Crook, and how to think about the implications more broadly across the Eurozone when it comes to this banking question. Commerzbank and UniCredit, a story we will continue, of course, to follow for you and bring the latest on. Ollie Crook out of Berlin, thank you. Here's what else to be thinking about today then. Thinking of Germany and the challenges around that economy, with Germany and the banking sector just one part of it. We're going to get at 9 a.m. UK time the German IFO business climate. We've seen the data out of Germany just continue to soften. We saw that yesterday in terms of manufacturing, services as well. What will the IFO business survey tell us about the sentiment then in terms of the business community of Germany at this crucial and challenging time? That's at 9 a.m. UK time. 3 p.m. UK time, we switch focus to the US consumer confidence. You can tie that, of course, to the labour market. We know that FOMC officials are increasingly concerned and say the focus should be on the labour market. Certainly that's what we heard from Austin Goolsbee. So the consumer data and sentiment survey out of the US will be consequential as well. And later today, in one of the key EM spaces, particularly when it comes to oil production, Nigeria's rate decision is later today. We will bring you that decision. Talking of Nigeria, we have had an exclusive conversation with Aliko Dangote, Africa's richest person. We will be speaking to Dangote, hearing from Dangote in the next few minutes on this show. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Switching focus, and coming up after the break, Israeli airstrikes on targets across southern Lebanon kill nearly 500 people in a major escalation. More on the rising Middle East tensions next. This is Bloomberg. Israel has launched airstrikes across southern Lebanon, killing nearly 500 people in one of the deadliest days of fighting in nearly 2 decades. Meanwhile, the US says it's sending quite a small number of additional troops to the Middle East and is urging restraint as fears of all-out war grow. Bloomberg Horizon's anchor Jemana Pasechi joins me now in the London studio. Jemana, what is the latest?
Yeah. Well, yesterday was the deadliest strike on Lebanon since the beginning of the war, since October 7, but also the deadliest day seen since the 2006 Lebanon-Israel war that lasted more than a month. Israeli military said that they struck more than 1,300 military bases throughout the country, not just specifically in Beirut, but southern Lebanon, eastern Bekaa as well. By the end of the day, the Lebanese health ministry said that almost 500 people had been killed, including 58 women, 35 children, 1,650 people were wounded. Now, Israel says that many of those killed were members of the Lebanese military, Hezbollah. They said that the group had placed rocket launchers in people's private homes. And earlier on in the day, many residents across the country received messages directly from the IDF warning them to leave their residence and residences. And the issue is, in Lebanon, there are no bomb shelters, so people really didn't know where to go. And what you saw was massive traffic jams from the southern part of the country all the way up to Beirut. A lot of panic, a lot of fear about what was happening. Lebanon really hasn't seen a day like this in over 20 years now. Now, throughout the course of the day as well, Israel also, Hezbollah launched further rockets into northern Haifa. Sirens were going off. Most of them were intercepted. But again, if you listen to the language on both sides, it doesn't appear at this point that either side is going to.
Just very briefly, the United Nations General Assembly taking place in New York. What is the diplomacy at this point?
Yeah, well, the U.S. are really pushing hard for a diplomatic solution. The Lebanese Prime Minister cancelled his trip, given everything that's going back home. The Israeli Prime Minister is still going to be heading there towards the end of the week, but a shorter trip than had been anticipated. He will be addressing the UN at some point later in the week. But at this point, again, many people are saying that the diplomatic channels don't seem to be working. And if they had worked, then you wouldn't have seen an escalation of this sort or of the kind that has happened in the last week on the Lebanon-Israel front. And many people are saying as well that Israel had been looking to escalate, to de-escalate, but given Hezbollah's response, at this point, the de-escalation seems unlikely.
OK, Hjalmar Besetchi, thank you very much indeed with an important update out of the Middle East on what could be a pivotal moment for that region. Bloomberg Horizons anchor Hjalmar Besetchi. Coming up, Africa's richest person, Aliko Dangote, says it is time for Nigeria to end fuel subsidies. We're going to bring you some of our exclusive conversation with the CEO and founder of Dangote Group. That is next. This is Bloomberg. Nigerian billionaire Aliko Dangote says the time is right for the West African nation to end a decades-long subsidy on fuel. Dangote spoke to Bloomberg exclusively.
Subsidy is a very sensitive issue. If, I believe the problem is not only the subsidy, it is problem that, once you are subsidizing something, then people will be blotting the numbers and government will end up paying what they are not supposed to be paying. But this, our refinery, will bring quite a lot of issues out there. It will show the real consumption of Nigeria because, nobody can tell you. Some people say 60 million liters of gasoline per day. Some say, no, it's less. But right now, if you look at it, by us producing, everything can be counted. So everything can be accounted for. And most of the trucks or ships that will come and load from us, we are going to actually, put a tracker on them to be sure they are going to take the oil within Nigeria. And that, I think, can help the government to save quite a lot of money.
So do you think it's the right time to get rid of the subsidies?
I think it is, because all countries have actually gotten rid of subsidies. Let me give you an example. Saudi Arabia used to give what Saudis, the citizens, believe that, look, oil is our own God-given gift. So the government shouldn't charge us for it. So government were selling it at a very low price. But today, as we speak, gasoline is about 40% cheaper in Nigeria than in Saudi Arabia, which I think it doesn't make sense. That is one. Number two, our price of gasoline is about 60% of the price of our neighboring countries. And we have very porous borders. So it is not sustainable. The amount of subsidies that were paid, government cannot afford those subsidies.
So do you need the government to take away the subsidies for your refinery to be viable?
Well, you see, we have a choice of either when we produce, we export, and when we produce, we sell locally. But we're a private company. And yes, it's true, we have to make a profit. We build something worth $20 billion, so definitely we have to make money. The removal of subsidy is totally dependent on the government, not on us. We cannot change, price. But I think, the government will have to, give up something for something, So I think at the end of the day, the subsidy will have to go.
OK, that was the Dangote Group founder, chairman and CEO Aliko Dangote speaking to Bloomberg's Francine Lacroix in that exclusive conversation. Coming up next, the UK government tries to change the tone on the economy as it holds its annual conference, the Labour Party's annual conference, of course, not the government's annual conference. We're going to have the details on that as well. Currently checking in on your futures as markets weigh up the stimulus from China. European futures pointing higher by 0.5%. US futures just clinging on to the green. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. China goes big. Stocks rise after the PBOC unleashes unprecedented support for the economy, including a rate cut and measures to prop up the housing market. A major escalation between Israel and Hezbollah. Israeli airstrikes kill nearly 500 people across southern Lebanon in one of the deadliest days of fighting in 20 years. And Keir Starmer's keynote speech to the Labour Party conference. Can the UK Prime Minister reset the tone on the economy? Let's check in on these markets where the focus for investors right now is squarely on the policy response of Chinese officials. And you're seeing gains. In fact, Chinese stocks up to the highest level since around March of 2022. In fact, it's the best day, I should say, the best day for Chinese stocks since March of 2022. The rally is pronounced across the CSI 300, up almost 4%. The read across then is there for Europe. European futures pointing high by 0.5%. You can see the commodity complex rallying on the back of these responses, injecting around $100 billion, a little over $100 billion of liquidity support into the equity market of China. The response then, the ripple across to the European markets, is being felt. The FTSE 100 currently pointing up by 29 points. S&P futures, after grinding out gains of 0.3% yesterday, close to record highs, currently flat. Nasdaq futures also in similar territory. Let's flip the board and look cross-asset. The focus, of course, on oil, on the euro dollar as well. We're reflecting still on the soft economic data out of the Eurozone. The data out of the US, though, slightly more benign. The US business activity data coming in a little slower in terms of the September reading, but a gauge of prices increasing to a 6-month high, suggesting that the wheels of that economy are still firmly on. The US 2-year currently at 3.58, euro dollar at 1.11, up 0.1% on the single currency. Brent crude at 74.72, up 1%. The geopolitics of the Middle East in focus, as is the demand picture out of China, of course. And talking of the demand picture out of China, iron ore rallying almost 6%. Check the miners and basic resources as a sector when they start trading UK time, 8 o'clock, of course. But a strong session so far in terms of pricing around iron ore. Copper also up. To Fed officials now who have been voicing and giving some clarity, giving some details in terms of how they're thinking about the next moves, given that 50 basis cut, of course. Fed officials leaving the door open to additional large rate cuts. Chicago Fed President Austin Goolsbee says he estimates the current US benchmark is hundreds of basis points above neutral.
If conditions continue like this, there are a lot of cuts to come over the next 12 months. There's virtual unanimity about that. So whether the next one is 25 or 50 or 0 or whatever, my view is over the next 12 months, we have a long way to come down to get the interest rate to something like neutral to try to hold the conditions where they are.
OK, let's get more from Bloomberg's Paul Dobson standing by. Paul, until China came to the fore with this policy response, it was all about these FOMC officials and their comments about the next steps for this Federal Reserve. Do we have clarity now on where they plan to go? Talk to us about the market reaction to what we've been hearing from the likes of Goolsbee.
Yeah, hi, good morning, Tom. Well, I don't think we have complete clarity on exactly, well, I guess we have clarity on where we're going to go, but not so much on how we're going to get there or how quickly we're going to get there. A lot of the Fed policymakers, right, have been talking about the need for continuing cuts. Goolsbee, perhaps the most dovish that we've heard from so far. And not all of them, by the way, are in that same camp of needing to be aggressive or needing to go a lot further. Some of them still a little bit wary over inflation as well. What we have seen, though, is that continuing pressure on shorter-term yields and continuing steepening of the yield curve as well. I think it's noticeable that while all of those comments last night and in the US session left the door open, as you said, for a bigger cut again in November or December, none of them explicitly said that that's where they want to go. And so that leaves us still in that little bit of a no man's land. Are we going to get another 50 basis point cut? Are we going to go back to 25, 25, 25 from now on? Market doesn't exactly know. It's still kind of keeping that same pricing, looking for one more aggressive cut either in November or December, but we're not sure exactly when that will be. Nonetheless, still supportive for equity markets. They dribbled a little bit higher again in yesterday's session, looking positive again for today, most likely based this time off the Chinese stimulus. And by the way, that in itself was helped by the Fed's cut. It opened the door a little bit to allow PBOC to be a bit more aggressive with what they wanted to do today.
Yeah, indeed. That's an important point to make, isn't it? That the Fed is very much linked to the policy action of the PBOC and officials in Beijing, giving them that space to move. What do you make of the market reaction to the stimulus out of China then? It is an aggressive rally across Chinese equities so far. The question is, Paul, I guess, does it fizzle out or is this going to be sustained?
Well, I think that what's quite telling is the market did not immediately jump on this and with massive enthusiasm and open arms. It was quite careful, quite cautious, quite skeptical at the start of the session. Took quite a long time for that gain to start building momentum. And I think that's a testimony to the fact the market has been once bidden, twice shy, or maybe 85 times bidden, 86 times shy, or whatever it is, but not wanting to buy into this until they're absolutely convinced that this is really a package that's going to deliver. And the fact that there are so many different measures announced within the policy, not just a rate cut, also a triple R cut. The first time he's done both of those in 10 years. Extra measures to help support housing, extra measures to help support equities, including buybacks, including some more leverage from PBOC as well. The mention of a possibility of a stability fund as well. The cuts in the mortgages, lots in there for people to get excited about and for people to really think that this is a convincing package that's coherent and consistent as well. And so I think that's why markets steadily gained momentum through the day, particularly on the equities side. Longer-term yields, although they fell to a record low initially, also backed up as well. Another sign that market is confident that this is going to help the recovery. Maybe it's not, in itself going to really propel things in a massive direction, but it should be enough to sort of secure that 5% growth target that China is aiming for and therefore give the market some more extra support.
OK, Bloomberg's Paul Dobson, thank you very much indeed. The market context around the moves coming through from China and the policy response, that stimulus being announced. Thank you. To the UK right now, where the Chancellor has struck an optimistic tone in her speech to the Labour Party conference. Rachel Reeves promising no return to austerity, despite repeatedly flagging what she calls a £22 billion hole in the government's finances.
Next month, alongside our Business Secretary Jonathan Reynolds, we will publish our plans for a new industrial strategy for Britain. A strategy for driving and shaping long-term growth in our manufacturing and service sectors. A strategy to unlock investment, create jobs and deliver prosperity. A strategy to help break down barriers to regional growth. Speed ahead to net zero and clean power by 2030 and build prosperity on strong and secure foundations.
Our UK correspondent Lizzie Burden is in Liverpool for us at the Labour Party conference. So, Lizzie, the way some would characterise this is we've gone from the heady hyperbole of the Boris Johnson and Tory years to the doom and gloom of the current Labour government. Has the Chancellor shifted the mood at the conference?
Well, whatever the mood, Tom, what business wants is detail, and arguably the lack of it throughout the election campaign and the first 80 days of government has created this vacuum that's been filled by the stories about infighting and freebies. Yesterday, you heard there the Chancellor Rachel Reeves making that speech. Again, it was policy light, but of the details that she did give, as you heard there, she said that we'll understand the industrial strategy next month. She also said, cryptically, it is time that the Treasury moved on from just counting the costs of investment to recognising the benefits too. Now, she didn't elaborate on what that means, but sources tell us that institutions like GB Energy and the National Wealth Fund are going to be taken off the books, and that should give the government an extra £15 billion of borrowing, and that would work more like the systems in France and Germany. Remember, every penny she can get is necessary at this point. She needs to crowd in private investment, and at the moment that's counted on the government's balance sheet. Now, this could come on top of the extra £16 billion from changing the fiscal rules, which, as we heard from Darren Jones yesterday, the Chief Secretary to the Treasury, they are not ruling out. And it would also come on top of that £4 billion that our economists calculate she will get from the Bank of England's recent decisions on the interest rate and quantitative tightening. So all of this potentially really important for growing the economy, their key mission. And we're going to hear from the Prime Minister Keir Starmer later today. He will underscore that that is their key mission, but he will say, we expect that there will need to be tough decisions for the long term. This message, as you say, Tom, about doom and gloom is already weighing on the public mood here. We had a new poll from Ipsos saying 6 in 10 Britons are not happy with this government. Can he turn that around later? We'll watch Keir Starmer.
OK, a big day, of course, for the Prime Minister. Lizzie Burden will be there listening in at the UK Labour Party conference in Liverpool. Lizzie, thank you. Now, Japan's Prime Minister says his economic reforms have led to the highest wage increase in 33 years. Fumio Kishida also spoke on a Bloomberg panel yesterday in New York.
Economy has suffered. I have worked on the full range of economic policies during the past 3 years. The positive results of these initiatives are evident in a wide range of data, including the highest wage increase in 33 years. The Asset Management Forum will be launched by leading Japanese and U.S. asset management companies on October 3rd in Tokyo. The work, however, is still in progress.
Japan's Prime Minister Fumio Kishida. Now to some other stories making the news, or at least one other story with a focus, of course, on the election run-up in the US. Donald Trump says that if he returns to the White House, his first call will be to Chinese President Xi Jinping. He has accused Beijing of failing to honour an agreement that saw the US reduce some duties in exchange for China pledging to increase its purchases of US exports, including $50 billion in agricultural goods. The US presidential race has seen both Trump and Kamala Harris vow to take a tough stance against Beijing. Coming up, I'm going to be joined by the co-founder and CEO of Neko Health, which has just launched its full body scan in the UK. Already has signed up 25,000 people. Stay with us for that exclusive conversation around technology and healthcare. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, a Swedish startup that offers full-body health scans for a few £100, $2.99 in fact, has just launched in the UK and already has more than 25,000 people signed up. Neko Health was co-founded by Spotify's Daniel Ek and Hjalmar Nilsonne, who joins me now in the studio. Hjalmar, thank you very much for joining us. It's been a busy time for you and the team. So you've expanded. The UK is your first international expansion beyond Sweden. Why choose the UK and what's the response been so far?
Well, the UK for us isn't just launching in the UK. It's really launching our global launch. So in London, you'll find everything. You'll find person from every walk of life, every country. It's also one of the most competitive markets. You can find all major hospital chains, any kind of fancy checkup you can imagine, it exists in London. So for us, if we can show that this can work here and that there's a big demand here, we feel very confident that that means that there's a really big market out there for us.
OK, that's interesting. So it's a good testing ground for you. So what has the response been, and do you think it can be sustained? Is your sense that the kind of sign-ups that you've had can be sustained, or is this a kind of one-off jumping on the bandwagon?
Yeah, well, the response has been unbelievable for us. So in about 2 weeks, we've sold out and booked 25,000 people, and we've spent zero on marketing. So this really just shows that there's this incredible hunger from consumers for something different. People want something more preventative. People want to take care about themselves and their bodies. And that's incredible for us to see. And it just keeps going. So we've been blown away. And, our biggest problem right now is how can we serve these people as soon as possible?
Does it tell us as much about the NHS crisis, the healthcare crisis in the UK, as it does about your services? To what extent is this a UK phenomenon, do you think?
Well, we launched first in Sweden, and Sweden is famous for having good healthcare. And we had exactly the same experience there. We sold out in less than 2 hours. We have tens of thousands of people who have joined our wait list there. So we don't think this is a national problem. If you look at the healthcare, basically everywhere in the world, you have the same challenges. So costs are spiraling out of control. We can't staff the system that we have today, let alone grow it. And the patient experience seems to be deteriorating every year. And let me be very clear. Both of my parents are doctors. This is not because someone in these medical fields are doing anything wrong. They're working their ass off. And like, I've seen that. So this is about, we have a system and there's something fundamentally wrong in how we're growing it. And we think what's missing is the prevention. So 75%, roughly speaking, of our healthcare costs are tied to chronic disease. And chronic disease are largely preventable, or you can greatly delay it with the appropriate interventions. But today, you basically only see the doctor when you're already sick. So we think that's a fundamental problem. And we also think that the future can be much better. I think there's a lot of doom and gloom about the healthcare system, and everyone is just talking about all the negatives. If you look forward like 2040 or 2050, I think it's undeniable that the future healthcare system will be driven by lots and lots of data. You will have incredible tools for interpreting that data if you look at what's happening with AI. And that will lead us to a healthcare system that's more human, that's more humane, where the doctors actually practice like their bedside manners and helping people on a personal level rather than doing the sort of day-to-day admin and drudgery.
Well, look, you talked about costs, and Daniel Ek, the founder, of course, famously of Spotify, your co-founder, and you both talked about the need and the desire to democratise access. £2.99, so £299 in the City of London. For many people working in the City of London, that will be a price they can afford to pay. For many others who are used to free healthcare, that will be a steep number. How do you get the balance right between protecting margins and making sure that you can democratise access? Are you making a profit on this service at this point?
So the reason we started Neko is we want to have an impact on like a national level. We want to contribute in a way that can benefit everyone. Now, we are a direct-to-consumer, meaning we have no subsidies, which is why we have the price that we have, which we think is incredibly competitive, and we think the value is probably as good or better than some of these very expensive fancy services.
Are you making a loss at $2.99, or are you making
No. So it's very important for us to have longevity in our clinics, so that all of our clinics and services that we're building now have a very clear path to being profitable and generating both revenue for the company that we can reinvest into R&D. We're currently running 6 different clinical studies. So one of the biggest things that we do in the company is to try to contribute to the medical science, medical knowledge. So that's what we use the cash for. And then the data is also part of that. Because to do better diagnostics, better prevention, someone needs to go out and actually collect the data about what's happening with everybody's health. And that's what we're doing with the Neko body scan.
What are you thinking about international expansion beyond the UK then? Where does the US, the largest market, where does that sit for you in terms of time frame and ambition?
Well, I just had 25,000 people sign up in this country in a few days. So we're pretty busy right now making sure that we serve them right. Obviously, we have global ambitions, so we want to go in all the biggest markets. But right now, our focus is serving the customers that we have here.
When we think of blood tests and when we think of speed, because you do that, you do blood tests and you do it very quickly. For a lot of people, they'll have flashbacks to the scandal around Theranos. Is that a headwind for you guys? How do you work through that? Is that a question of transparency? How do you address that concern?
Well, we are very transparent about what we do, and all of our devices fulfill all the regulations. They've been reviewed by the CQC, the Commission for Managing Medical Quality, and so on. And all of that was also happening in a completely different jurisdiction, which was under the FDA. So it doesn't really interface sort of with the day-to-day work that we do. But I do think it plays a role in kind of how consumers have heard about this. So they ask about it and they care about it.
Yeah. OK. What about, so you talk about the fact that you want your clinics to have that plan and a track record, at least be able to get to profitability. Talk to us about the funding plans for the business then. Is Daniel Ek going to be putting more cash into this business? Are you going to be raising more for Atomico and some of your other backers? How much runway do you have, and what are you thinking about IPO plans?
So the great thing about partnering with Daniel in this is Daniel is a very long-term thinker. He does, his biggest problem in life isn't that he needs more money, so he's not looking for an exit or anything quick. He wants to build something that can have great impact, which gives us the longevity to really invest in the long-term vision of prevention. Then last year, we were very fortunate to get, I think, the best venture investors in Europe in our first external round with Atomico, Lakestar, and General Catalyst. So the company right now is very well funded with long-term investors, which is fantastic. But we do have global ambitions. So as we go into new markets and new continents, I'm sure we will raise money, but that's not something I'm spending any time on right now.
OK, Hjalmar, thank you very much indeed for joining us in the studio on the back of this UK launch and the ambitions for this business going forward. The CEO and co-founder, Hjalmar Nilsson of Neko Health. Let's just briefly check back in on the Asian markets with a particular lens on China, because, again, it's been a huge day in terms of the policy announcements coming through, particularly from the People's Bank of China. And you're looking right now at the benchmark CSI 300 up around 4%. That's the best day that Chinese stocks have had since around March of 2022. So the gains are coming through. The question is, will they be sustained? So the CSA 300 up 4%. Over in Hong Kong, the HSI, the benchmark there, up 3.7%, and an aggressive rally as well in terms of HS Tech, that tech-heavy index, currently up 4.8% so far in China. There's plenty more coming up. Stay with us. This is Bloomberg. OK, let's check in on how the positioning is unfolding in terms of one of the key trades for the likes of BlackRock and PIMCO. It's the 2s, 10s disinversion. And that trade is playing out on the back of that 50 basis point cut, of course, from the Fed. The question is, does it continue to play out? BlackRock says this has another 3 to 6 months to go because they see further cuts and further positioning then in terms of yields lower at the front end and a little bit more stable, maybe even ticking up at the back end. So that disinversion trade is there. The steepener trade is there. But there is that debate. Do you lock the profits in at this stage or do you lean into that? BlackRock says lean in. There's another 3 to 6 months. JP Morgan says lock the profits in around the steepener trade now. Let's flip the board and have a look what's happening in terms of the equity markets as we weigh up again the commentary from FOMC officials and just reflect on the fact that the S&P notched gains of 0.3% yesterday, back close to those record highs. But here is maybe a caveat for you, because in terms of net futures short positions on the S&P, they are now at the highest level since March. So there is caution about how far this equity market rally can continue on the S&P 500. Talking of equity market rallies, let's flip the board and have a look at the CSI 300, because today it is having a phenomenal day. The biggest gains that we're seeing in terms of a single day for the CSI 300, the benchmark on the mainland of China, since around March of 2022. But here's the context going back. We are still set for potentially a fourth straight year, unprecedented of losses in the Chinese markets. Or does the policy response of today, with a focus on monetary policy, be backed up as well by a fiscal response and keep this rally going? And maybe you get to that target in terms of GDP growth for China, and maybe the equity markets sees a sustained turnaround. That remains a crucial question, of course, for investors exposed to the Chinese market. Later today, we're going to speak to the CEO of Euronext, Stéphane Boujnah, on how France's political environment is weighing on the IPO market. But the opening trade is up next. This is Bloomberg.